Session just after 3 p.m. on July 14th. How is everybody doing? Thumbnail today, eating up AI hope. AI stocks, AI everything, driving optimism, driving hope, driving the melt up, driving margins, driving the forward guidance. The reality is everyone's talking about this pullback, me included. I think we get one. I just don't think it's going to be as meaningful, or if it's meaningful, I think it's still bought up. To the tune of a 4 to 6% pullback would be kind of mild. I think a 5 to 10% pullback, maybe 5 to 15, depending on the volatility, would be bought up. So just post it here in Telegram as earnings season kicks off this week. Haves and have-nots. Listen to an insurance podcast called Thoughtful Money with Adam Taggart, the guest he had on from Piper Sandler. I was talking about, there's clearly a difference between the market, doing well with companies with high margins, lots of cash, lots of competitive advantage, and then everything that is now AI. AI is such a blanket word for everything. It was, blockchain last year. It was crypto last year. Crypto is obviously kind of hot this year. Treasuries like Bitcoin treasuries or stable coins. But there's clearly buzzwords that the market is jumping around. The last, I'd say 12 plus months, we've seen, everything that's AI related is getting a lot of melt up potential or just rip potential. And so I'll put it this way. I mean, I'm still bullish in the market. I hate that we've gone to a pretty low volatility environment, and I'm kind of hoping and wanting to see a slightly higher volatility shock. Not shock necessarily, that's the wrong word, but maybe just a bit of a surprise. Maybe this week with CPI, maybe at the end of the month with the Fed. This week we also have a monthly cycle that should be pretty decent as far as the July 18th expiration. Earnings season kicks off this week. We get into the meat of it next week with Mag 7. But without having some crazy amount of disruption to housing, or all of a sudden the U.S. economy just completely stalls, or the consumer breaks, or employment is a huge shock, or we just expect more of the same. I mean, even the trade war noise that we're seeing, copper at 50% tariffs, and Canada getting hit for 25%, Brazil getting hit for this trade war deadline on August 1st, which is a couple weeks away. Unless the market takes it as an extreme shock, and it really affects housing, employment, or U.S. growth, I don't see the markets doing anything different. I see some pullbacks, I see some reality checks, but I'm still going to position fairly bullish. So I do have a trade that I wanted to look out. I've got a couple of pending orders on Qs. And I'm looking at a trade right here. It's just a 1-1-1 position out to December. I'm going to try to get filled for a slightly higher credit. This one here, let me just take this one out, make sure this is all correct. So I was looking at January 16th to December 31st. I'm looking at a $10 credit. I mean, part of me just wants to take the trade right now. I just know that if we have a pullback, that could be somewhere between 20 to 50 points on the Qs. So that could lead to like a $2,000 to $5,000 drawdown, just because this is a naked put. I would have a $5 profit trap, but I'm looking at a 420 by 415 by 410, collecting over $3 of income. I'd like to take more than that if possible. So I'm putting the trade in for a $10 credit that's going to be pending, because if I get filled at $10 credit, it's $1,000 on the following accounts. So it'd be roughly $1,000 on how many accounts here? Probably these 9, 1, 2, 3, 4, 5, 6, 7, 8. So it's 8 accounts, $1,000. It's $8,000. Probably won't have to own I won't have to own the Qs. I don't think. There's a 98% chance of profit here. Odds of assignment are probably 5%. But if I did take assignment, my plan B is to work through the trade with ownership, and I have enough capital to own the shares, deploy the capital, and flip. So I can either, flip quickly for $10 and try to, make $1,000 again, like that was my initial trade here. So try to make that, if not more, or see if I'm going to get lucky with some type of bottom and, stay long the Qs for maybe $20, $30, $40. But you can also just sell covered calls and stay out of the way and let price appreciate like it's done this year, which is going to melt up literally from the bottom all the way to all-time highs. And, back in June, I let a lot of those profits go. I didn't hang on to my shares. I bought the Qs down at 410. I bought the SPY down at 486. Had some really good timing levels. Had some really good shares running through like May and into June. As we broke above a lot of key resistance levels, we had that U.S.-China trade agreement gap. Right after that gap, I started to close profit. I thought, we're probably going to fill that gap. No, we really didn't. We went up a little bit higher, tested the gap open, and we've melted up higher with that ceasefire agreement that propelled stocks into all-time highs. So I still think those are vulnerable structure levels to pull back into that trade war gap, or the ceasefire agreement gap to pull back in the U.S.-China trade agreement gap. That's fine. That was a trade pause, right? So we pull back to those levels. That's why I'm getting kind of the 5% technical corrections based on current price. So anyway, pending order at 310. And I mean, part of me, like I said, wants to take the trade. I just think it's better to get filled at a higher credit. So I'm going to take a January 16th trade. That's a ratio spread. And I'm going to take the 111 out to December 31st. And any pullback here, I'm just going to watch because I may not get to fill at 10. But if this spikes up to like $6, $7, $8, I'll probably just take the profit after the market has dipped and we get a little spike up in volatility. I would be really surprised to see the VIX at 17. This is talking about basically daily swings of the S&P potentially at a 1% move. If the VIX is trading at 16, that is the market looking at a 1% plus or minus move every single day. That's still a high VIX, right? So at any point in time, this market could have like a big move. We have seen it to the upside. I mean, we had the July 3rd run, which was a gap higher and a melt up like 0.9%, and that was trading with the VIX around like 15 or 16. We saw a 1.23% move to the downside last week, but it was bought right back up. That would have been this trade here. So this was 1.23% from the gap lower all the way down to the low of the day, and then came back up and kind of settled in at the halfway point. So that was Monday last week. Tuesday was choppy. Wednesday was down and back up. Thursday was up and back down. Friday was nowhere. Today, a lot of chop in the morning until about 11 a.m. Eastern time, and then the market melted up just a little bit higher. I still have some trades trying to get filled around a 62.80. I don't think that level is going to get filled, though. So if it does, I'm hoping I can collect $5 of credit. That would be coming all the way back up to the highs. I don't think we're going to get there. This trade that I have running right now is pending. Let's go SPX here. Anyway, let me go back to this trade because I think I got to get this in for other accounts. That was this one here, 111. So I'm going to go similar. Make sure I don't have that trade overlapping. Okay. This one here. All right, I'm going to put this trade on for, it's December 31st, 111. Pending. Okay, and this account. Pending. This account pending. Okay, and then final 3. 1, 2, 3. Okay, so those are pending orders. Get that one in here. QQQ, this is PM accounts. Let's go QQQ, 12/31 expiration. Buying the 4/20 put. Selling the 4/15 put. And then selling the 4/10 put. Going after $10 credit. If I took any assignment, we'd have to be all the way below 410. The assignment price would be 410. I get a $10 credit. Everything goes down to $400 ownership. I have a $5 profit trap as well in case I'm kind of ideal on those, ideally positioned on those April lows. So anyway, willing to own the shares of Qs and SPYs. Those are going out towards, November, January, or November, December, January, trying to position for the markets just up here. If we look at the market here, QQQ, if the market's somewhere in this area, it's just profit, right? There's no assignment risk. It's just profit. If this is a big choppy zone, so be it. If the market's going to make some, wild and crazy broadening pattern, then we'd have to start turning hard, at the second half of this year, which is nowish. But we'd have to have a massive decline. I'd say that the Qs would have to break well into the 500s. I think the SPY would have to break well below 4 or 570. S&P, so go to SPX, we'd have to probably break this 570 support. Like I said, unless the market is a shock. If we just come back down, retest to 50, if we're testing these support levels, there's a lot of support in here. We test those levels, okay. Do we bottom out stabilize, work our way back up. We get back to highs. We're talking, maybe into the, SPX going up somewhere between about 6 to 10% for the year. If we're back up towards these highs or higher, Nasdaq might be a slight edge on that by about 20%. So maybe like a 7 to 12% move on the Qs. That's coming off of 20+% years on both. So anyway, we'll see. What up, Kevin? How are you? Happy Monday. Took a trade on IWM today for waterfall income, looking to see if we come sniff out these all-time highs. If we do, that should be good. 288 is offering up 212 max profit. I could go out of the money, make this even better, but timing-wise, it was just something for a nice mechanical trade in my waterfall income. That's area 1. If we get any dips or pullbacks, I'm still interested in kind of buying and scooping up some dips on small caps, see if there's that catch-up trade. It's not really, small caps outperforming per se, but it's definitely a comeback trade to see if these valuations improve. We've had a bounce off the April lows up 30+%. I think the Nasdaq eclipsed that actually. Nasdaq is from the lows in April 7th. That's up 30%. So Nasdaq has outperformed the Russell. I'm not sure what the SPY did exactly. I think we're in the high 20s for this. 29%. So, S&P outperformed the Russell. Well, actually, no, 31% of the Russell, 29.93% S&P. So a little bit of an outperformance by the Russell. The Dow has had a pretty big comeback as well from this low all the way up. Dow's had about a 22.5% recovery. So, maybe some room to get back up here. Again, I like the Dow if we have a pullback, right? We get a pullback here towards 430, pullback here towards 420. I like the Dow to scoop up some premium, try to get back to these highs. What else? I put a trade on Coinbase today. That was issued in Project Options Edge. I'm looking at like a 455. Earnings on Coinbase is out to the 31st. So my expiration is the week before that on the 25th. We'd have to continue to move at like 2 to 3% a day to the upside in order for my trade to be threatened. 455 is the level that I'm watching. And I built it out. Here's an easy way to look at it. Here is option strat. So this is coin out to the 25th of July. It's only a trade that it offered me 58 cents credit, so I took it. So that's really the profit that I should expect is about $58 per contract, but I do have a potential profit trap in case price is going to run a little bit higher. So if price is going to continue to move higher on price, this is your underlying price down here. So price goes higher versus lower. If price goes up, I could potentially turn this into a profit trap that's worth another $5. So what is probably a high probability $58 profit, my trade is filled for 58 cents. So what's a high probability 58 cents could potentially be a $5 winner on top of the 58 cents. So potentially, 558 max if I'm in this trap by about 15 or 20 points. And that's a 15% increase in the stock with no real earnings catalyst until, earnings is on the 31st. Obviously, some bigger run in Bitcoin could possibly drag this higher. I just looked at the kind of the outlier of like how expensive the call premiums are, and I decided I'm going to sell them rather than buy them. So I'm taking advantage of a trade like this called a call condor. So I give myself, price goes nowhere, I make money. Price goes up a little bit, I make money. Price goes up a decent amount, up to 15%. I still make money with a profit trap. Price goes down, price goes down, price goes down, no problem, make money. There's risk, but I think the trade works out. Probability wise looks pretty good. 91% chance of profit on that trade. I posted that for Project Options Edge and Pulver alerts. Okay. All right. What else we got? Daily profit play did pretty well today. Let's see how many. I'm not sure how many followers I have watching today's session. I'll talk about this more in my daily profit play tomorrow. I'm looking at revamping my morning sessions so I can have a little bit of touch and address on every class that I teach, so we can have a morning block where I can talk daily profit play, waterfall income, news breakers, double up, pinch point. If we need some downside protection and hedge, we can look at crash insurance. Just little bits for everybody to understand, like, my job is trading all day. And, sometimes I have classes for everybody through the week. Sometimes I don't. Sometimes I have alerts every week. Sometimes I, have a couple weeks off. But I'm always watching. And so I just want to make sure that I have a, pretty good routine for every member of every class that I have to have an opportunity to come in and spend some time together and see where we're at. Share some knowledge, share some strategies, and obviously try to find some good trades. So I'm kind of working on the organization of that this week, and hopefully by next week this is ready to go. And more communication the better as far as coming into those sessions. And if you're new to me or new to the franchise, you'll see there's a little something for everybody. We can day trade the indexes, we can swing trade, we can trade up, down, sideways, we can trade really simple strategies, we can trade a bit more advanced strategies. But throughout whatever I do and all the services I run, I want to make sure that you are taught properly with all the tools, all the resources, all the education, all the live classes to understand exactly what we're doing from start to finish. So that way nobody's left in the dark. They're easy to follow, all the criterias and all the alerts, and there's a method to our madness all the time. Okay. Every trade I take in my services is live. It's live capital. It's live money. There's no fake BS here. Like it's all real trading. So if I take a trade, it's live money behind it. And that's why I also don't just throw trades out to throw trades out. I use discretion. I'm willing to switch gears. I'm willing to change my mind. I'm willing to be more cautious. I'm willing to be more aggressive. That's what trading is. I think I reserve the right to be flexible in my strategies to make sure that I'm making the most money I can the safest way I know how, right? And not be silly. So anyway, we'll talk more about that this week. But like I said, I'll share that more in the daily profit play, because we're going to be kind of taking in some of that block of our daily profit play session. Will be incorporating some other touch points. And I just want to make sure everyone's on the same page. So we'll talk more about that. All right, intraday, let's have a look here. We had some pretty good walls up today. Markets were resistant between like 6280 to 6300, and finding some support between 6200 and 6220 to 6200. And this is the entire day. So markets for the day pretty much went nowhere. That's totally great. As far as a directionless day and a directionally neutral strategy, worked out pretty well. We were watching some key levels this morning. So we had a push lower, got back to center. This is all the chop here between about 11 o'clock, so opening bell to 11 o'clock. Then the market just kind of slowly worked its way higher. We were initially talking about trades around 62.75. This is actually what we took this morning. What was the trade here on SPX this morning? We did 2 bear call spreads. Let's see here. That trade's still offering. I mean, this is 100% profit on my waterfall trade. It just won't close me out at 5 cents. This trade's not going to fill. I'm trying to get filled for $5 on 2 more bear call spreads. This trade I put in for a broken wing butterfly today. That's not going to get filled, so I'll cancel that trade, get some buy power back. We're 40 minutes away from the close. This one's probably not going to fill either. Take that down. This one's pending to close. This one is the 18th. 18th. Oh yeah. Okay, those are all waterfall trades. So these are all pending orders for waterfall. Trade this morning was $1.15 out at 65 cents. So we got out of there for 50 cents a contract, which was pretty nice considering the trade was only open for about 40 minutes and pulled in about 50% of that max credit. I would have loved to have a better fill later in the day, or I don't know. It's fine. Like we got out of the trading here right around this like first pullback. That's where it was good enough to get out of the trade. And then tomorrow's a new day, so we'll approach it tomorrow. Earnings start to kick in tomorrow. Let's have a look at this week's earnings. Let's go earnings screener. Take this week. So let's go today to the end of the week. Actually, I'll look out to the 25th. Actually, let's go to 31st. Let's go the next 2 weeks. Let's go 3.0 on sensitivity for earnings. Okay, all sectors is fine. At least 1 million shares. Give me something liquid. Everything is optionable with weeklies. Submit that. Okay. Oh man, that's a big difference. EVR 10. Good lord. Let me take this up to like 3.5. 4. Gosh, I've got 4. I had 19 stocks. Now I have 45. My criteria didn't change that much. Well, heck, that's a lot. Let's go to maybe this week I can just go a little bit more concentrated. Let me take the 31st out. Next week is a big earnings week. So the 21st to the 25th, we have a lot of earnings. Let's just go this week. Maybe I can shorten up that list. Yeah, this week with my earnings sensitivity, I have 0 stocks actually. So for news breakers, let me see if I pull in a 3 for my EVR, which is my earnings volatility rating. Maybe I can get 3 versus 4. Now I have 3 stocks: Netflix, UAL, and MMM. I want to take a look at these prices. So let's see if the options chain is pricing out Netflix in a good way. So let's go earnings on Thursday after market. So you have basically Friday to manage it. Implied volatility in points, 86 points. Let's go Netflix. So Netflix, UAL, and MMM. All right, so I'll price that in. Let me look at this one. Netflix. So Netflix earnings history. On average, it's about a 10% mover. I'm going to say on the cautious side, I'm going to go about 11%. This stock is at 1265. Market makers only expecting 8655. So, I mean, this is implying about a 6.8% move. I mean, it's honestly, that's not too bad. It's going to be expensive if I did like a week out. So not Thursday to manage for a single day, but if I went a week out and, I mean, this is going to be very expensive straddle, but I'd pay $98 for what is supposed to be a 96. But based on my earnings play, about a 10.5% move at a 1265 stock. I mean, we're looking at about a $130 move on Netflix is very possible. So I kind of think, I don't know, Netflix sitting here near all-time highs, pull back to the 50. I mean, I don't know if we're going to disappoint in any way, shape, or form, but if I could sell some big fat premium up here, let me see what the move would be. Market's looking for about an $86 move. I think there's going to have like maybe a 130 move. So could I sell like 130 points? I could sell like the 1400. I might try to take that trade actually. I might try to fade this move, which again could be futile, but let's go Netflix. Look at the 25th. If I were to sell a 1400, I'm not going to take the trade as it offers me credit because it's going to be terrible credit. But if I sold a 1400 and do a 10 wide here, 1400 by 410, as long as I can get, let's say $6 credit for that trade, that's essentially selling like the high end of the move. That's my calculation. Now the broker could have it calculated at 86. It might exceed that. The broker shows here about 96. That's where we're going to get here roughly on the edge of that red area. So this is at the money Netflix. You go up in the options chain and you see here 1360 to 65 would be kind of what the broker is expecting. I'm going to go up to what I calculate, which is around a 10% move. Okay. So if we get to 14 by 1410, I pull in $6. The most I can risk is $4. And so if we have a big blast off and this can get filled at that credit price, I mean, I'd take 5 or 550 for this trade for a 1-to-1, but I give myself a slight edge in profit. So I'm going to go here for it's going to be $400 in buying power. I'm looking to pull in $6 of credit, and I'm going to sell at the high end of that move. So I'm going to put this out here. This will be a trade for newsbreakers. Let me throw this into newsbreakers right now. Newsbreakers, new trade, Netflix. We're going 7/25 expiration, which is going to be next Friday, not this Friday, next Friday. Sell the 1400 call, buy the 1410 call, and $6 credit. Pending order not filled. Netflix has earnings this week, Thursday after hours. Broker expecting 96.66 in movement. My calculations based on past earnings is 10 to 10.5%, around 130. Let's do a 10.5% move on a 1265 stock, about $132. So if I add this to 1265, we're looking at about a 1395, 1397, 1400 zone. So about $132 move. I'm placing an out. I'm placing a bear call spread at my calculated expected move for a high credit, offering more reward than risk. This trade will only fill with a move higher after Netflix Thursday. Okay, so that is pending. Going into news breakers. So trade 49. Netflix, today is the 14th. 7:25 expiration. Sell the 1400 call, buy the 1410 call. $6 credit. So the idea on that trade is if I can turn a $6 credit into, I mean, my max risk is $400 on the trade. So if I turn it into a $100 winner, that's a 25% return on risk. $200, that's a 50+% return on risk. So I treat it like whatever I can get for a reasonable return on risk. Obviously, I felt like, I caught the top of the move and the market's fading hard, then sure, I can hang on to it and try to get as much of that $6 out of it as I can. But I'm going for a trade that hopefully allows more profit than risk. Okay. All right, so that's a pending order for Netflix for newsbreakers. The other one that I had, it was MMM and UAL. UAL is United Airlines, which we're trading at a 29.1 IV. Earnings is the 16th, which is on Wednesday. Let me price this one out as well. So UAL, we are at, what's the price at right now? About $88 on UAL. I thought I had some puts on this one, but maybe not. I think I had most of them on AAL, which is going to be popping up here for some profit. Yeah, I'm up about 86% of that max profit on AAL. Nothing on UAL? Nope. Okay. So, that's a big difference. Average move on UAL is 8%. Last couple have been over 10%. 29.1 IV. Earnings this week. I mean, is there potentially a big surprise move? Let's go. I see like a 10 to 12% potential move. I'm gonna be pretty conservative here and sell like a 12%. So 0.12 times 88.35, but a $10 to $11 move. So could I go from current price? Could I go up around $11? Let's look at this like 90, maybe the 99 by 101. Try to pull in 55 cents credit on this one. Try to fade that move. So UAL, if we jump up, I mean, this would be a high of 115. It's like we could have a huge earnings move, but I'm going up to hopefully what is difficult to achieve. I mean, if we go 12% times 88.39, yeah, so $11 move from current price. So we're trading at 88.38. I go up $11. I can do this one. I'm going to do the 100 by 102. Do this for 55 cents credit. Same thing on UAL. So again, this like gives the chance for the stock to pop and then hopefully fade that move back down. I'll try it. Pending order. This one's going out to newsbreakers. UAL, 7/18 expiration. Sell the 100 call, buy the 102 call. 55 cents credit. UAL has earnings this week, Wednesday. They report Wednesday before the market open. Broker says, broker expecting a plus minus 6.70, but recent earnings showing 10 to 12% average moves. I'm going to set up a bear call spread at the 10 to 12% expected move and look for a credit fill with better than 1-to-1. If UAL moves higher post earnings, this trade has a chance to fill, and we'll look for a gap fade. Okay, pending order. Uh, 7/18 expiration, sell the 100, buy the 102. Going after 55 cents credit. All right. Yeah, Larry, it's in the tracker. If you go to the tracker, it should be posted in the. Actually, you know what? Give me 1 second. I think Deanna's out right now, so I'm gonna get these posted for a boy, Jared. Jared. Okay, yep. So they should be posted in Telegram shortly. They should be posted in your classroom in maybe 30 seconds, and then they're already in the tracker since that's what I can control. Okay, last one that I had here was MMM, which is 3M, the old staple. Get some new post-it notes. Trading up near all-time highs, not quite there, but nice recovery since September of last year. Dip here in April. Earning sensitivity, let's find out. Okay, let me check. I'm just going to post this here. So Telegram, this is Newsbreakers. New trades posted for Netflix and UAL in the trade tracker spreadsheet. Log into details, trades number 49, 49, and 50. Okay, so we got it in Telegram. All right, so MMM at 157. Average earnings history, let's see what it shows. MMM around 11%. So a $17 expected move. Broker showing 28.7 IV, looking for about $17. Broker showing less than that. Earnings on the 18th. So we don't want to take the trade on the 18th. We'd like to probably go out for a week or so. 873. I'm looking at like 17. I mean, it's actually a pretty cheap priced option if within 11 days. Let me go post earnings here. If I can go out like 11 days and get, how many times do we get at least two? What is it? To at least like $17. Let's find out. I'm looking for 11%. How many times do we get 11%? I mean, we had one crazy outlier where day one was a 23% move. That was back in July of 2024. 11% in January 2024. The rest were all under. I mean, so part of me is wondering if this one is not a huge surprise. I wish this premium was higher. If I wanted to trade this at, let's say, gosh, it's like 55 to 60, and I go 10 wide. So I can pull in, $360 of profit, risking 142 as long as price stays basically between 155 and 160. I don't really love that trade because I have a little bit of an overlap here. So we'd have break even would be somewhere about 163 on the upside and 157 on the downside. Oh, I guess 152 on the downside. So yeah, 163 on the upside, 152 on the downside. That's kind of my break even levels. That's only about a $4 to $5 move, and we're looking at brokers at least playing like almost a $9 move. I don't think it offers enough premium. So better trade, in my opinion, is if we pop up, I look to fade that thing out for a week. This is a Friday earnings. If I fade the move, I'm looking at something on the high end about $17. So can we fade like a 15, like a 172? I could fade this 172 by 175, try to get filled here for $2.75. Again, this may not fill, but if we did fill, I'm going to try to put it in $3. So that put me a break even around 175. That's an $18 move, which is over what the earnings shows. Okay, so I'm going to do 172.50 by 177, try to get filled for $3. Pending order. So this is Newsbreakers, new trade, MMM, 725 expiration, sell the 172.50 call, buy the 177.50 call, $3 credit, pending order, not filled. MMM has earnings on Friday, so I'm going to the 725 expiration. Broker expecting a plus minus 874, but past earnings suggesting a average is about 11%. Earnings history 10.97. So that's right around 11% times 157.47, about a 17.32 move up or down. So we're trading at 157. I'm going to sell to 172. That is about $15. So I'm placing a bear call spread at my calculated expected move and looking to fade it for a greater than 1-to-1 reward to risk. Okay, so that trade is in. Get this posted. This will be trade number 51 for newsbreakers. Netflix is the 25th. UAL was the 18th. Okay, I just want to make sure I had those correct. Selling the 172.50 call, buying the 177.50 call, trying to pull in $3 credit. Okay, trading Netflix, trading UAL, trading MMM. That will take care of the screenshot for my earnings volatility rating and through this week. I know we have a bunch of like example would be like JP Morgan. JP Morgan is also printing earnings tomorrow morning. Their IV's at 16.9. I'll look at them just for the sake of it because we've had some pretty big pops on JPM. Jamie Dimon has been pretty vocal about like saying the economy is brewing a storm or blah blah blah, like trouble for the U.S. ahead, yada yada yada. The average move for JP Morgan is like 3.91%. So we don't have a ton of surprises there. And I don't know what the market's going to do. I would expect the market to kind of fade a little bit. We pulled back from the recent highs in JPM. As high as 296, we pulled back a little bit. I mean, a 4 to 5% move. I mean, let's go post earnings here. I'm looking at an average move of around, oops, not trend, sorry. Earnings history, 3.91, but I did have a lot of prints here in the 4s and 5s, 4.8, 4.7, 4.77, 4.5. I'm going to say a 5% move. So 0.05 at 288.56. It's a $14 move. Okay, brokers suggesting about a $9 move. So I'm calculating on the high end about a $14 move. Brokers are showing about a $9 move. And you might be asking, like, why don't you go long that? Well, if I'm long something that doesn't really move a lot, there's not really the big surprise post. So I'm kind of looking to like get the high end of the expected move and then fade that for a high credit. So if I take this trade, I mean, could I sell something above the all-time highs and then fade that? I would hope that I can. But you just don't know. It's like if I fade the move, like I might lose, right? So we'll see. But if I went out to the 18th, that's 4 days. If I go to the 25th, does it get faded after? Now we're looking at about a 1075. I'm still going to fade the earnings move around about $15. So we're trading at 288. Let's just round it to 290, sell the 305. That would give us a decent pop to the all-time highs. Do a 305 by 310. Try to pull in $3 credit and see if we get a surprise move and a good fill. So I'd get more reward than risk on the credit. I'd fade what would ultimately be like a pretty high move in earnings. And we'd have to have like a 2 to 3 standard deviation move in JPM. So it's also a trade that doesn't fill. I mean, if it doesn't go anywhere, we have like lackluster earnings, there's no trade. But that to me is better than trying to take this garbage premium that you sell to make about $9 or $10 worth of movement, and maybe the market surprises you with a $13, $14, $50 move, and you just bust up your trade. So I'm going to go on to the high end, try to take in the surprise move and absorb that, and then sell at a high premium. So I'm going to try this trade 305 by 310 for $3. All right, that's another one for JPM. Newsbreakers, new trade, JPM, 725 expiration, selling the 305 call, buying the 310 call, $3 credit. JPM has earnings this week, Tuesday, I believe, July 15th. So tomorrow, broker expecting, if I went out to the 18th of the 25th, it'd be a 1077 move through 725. My calculation shows a 4 to 5% average earnings move. So that puts us up around $14 to $15. Price move up or down. I'm placing a bear call spread at my calculated expected and looking to fade it for a greater than 1-to-1 reward to risk. All right, that trade is in. Trade number 52 on JPM. And I told traders last week, I was in a couple webinars with newsbreakers. I said, buckle up, we're going to take some trades. You're getting it. So 725 expiration, sell the 305 call, buy the 310 call, looking for $3 credit. Okay, let's see what we get. Okay, and some of those trades may not fill, but I'm putting them in a opportunistic spot for a good fill, greater reward than risk, and also an easy way to manage return on risk. Like if I get a quick like 25 or 50% return on risk, I'll just take the profit. If we hit the expected move, we get us some time, I'm risking less than what I'm able to make in the trade. So the asymmetry is there to take a good trade. I'm also basing on, my expected moves are on the higher end. I'm just not going to settle for like a mediocre fill. So hopefully that makes sense. Okay. How do you know earnings will be worse to push price? Well, Bullen, if you look at my options chain, I'm not doing anything to the downside. All I'm saying is if the market is pricing in like perfection, I can see the market's doing something like this. Okay. Markets have, positive earnings and they go up and then they fade, right? Like earnings is basically a coin flip. Sometimes the market is good news, bad news. Sometimes the market reacts a different way. All earnings is an excuse for things to move. Tracker layer, I mean this tracker, my newsbreaker tracker in the classroom. So your spreadsheet that I have. So there's JPM, there's Triple M, there's UAL, there's Netflix, all new trades posted. That's where they're at. Okay, and then in Telegram, I'm going to update right here. UAL. So go Netflix, UAL, MMM, JPM. Okay, so does that make sense? On the reason I'm looking at the trade is the broker's expecting a move like this. So here I'll give you. I've got a little newsbreakers action. Yeah, they're showing up now. That's why I'm saying that the quickest way to get it. So normally my team, Dion is my like 20 to 30 second live alerts. I'm posting for. I think Sean is taking care of it right now. Usually that's not what they do. So they're a little bit slow to the post, which is fine. We still have 8 minutes to get the trades in. But those should get filled. If you have the classroom access, jump into your newsbreakers, go into your classroom, check the trade tracker, and you'll see the trade number and the new positions I put in. Yep. So what I'm looking to do is this. Let me bring in a workspace here. This will make some sense. So I'm going to go newsbreakers here. So I built a newsbreakers indicator. Let's go JPM. Okay. So I built this indicator. Now I'm going to go edit this indicator and kind of give me the expected levels. So if I go into the settings, so I'm looking at, it should be an ATR setting here. ATR calculation, draw, weekly ATR. Yes, yes. Okay. Let me see if I can update this. Inputs, RMA, enable, draw, width. There we go. What the heck? It's been a minute since I used this. What in the world? Mine's tables. Okay, I'm looking for earnings ATR. All right, so we got daily ATR at 5. I should be able to adjust this thing. Earnings ATR at 20. Where's that at? Ah, there it is. Okay. So I'm looking at a move that potentially goes up around 1442. That's what I was trying to find. So I'm going to make this 14.42. So what I'm taking is a daily ATR with a weekly ATR and my earnings ATR, and this is on the high end. Okay. So I'm looking for an ATR on 1442, which means if price right here moves up towards that calculated move, I should be able to see price stay within this box. So to me, like a standard earnings play that doesn't really surprise the market is going to be price stays within this box. So we have a plus or minus, upside about $14, downside about $14. And let me see if I get this to play out. This might be just need a little tweak. Let me go 14. Let's go 16. That should move it a little bit higher. There we go. There. So now I'm getting the calculated move that I want. Okay, so plus or minus like 14, 15 bucks. So what I'm looking for is if price can stay below this green bar or stay above this green bar, that is based on my earnings history, what this stock should do. So rather than, this is what a lot of traders do during earnings. You do either a play where earnings is, okay, here's the stock price. If you think you can get a directional move, you try to buy something to the upside or buy something to the downside, and you hope that there's enough movement to get you paid. That's fine. But there's also a high amount of premium that is baked in to an earnings play because it's such a volatile move, right? So typically what you do is you end up paying for all the expected move. And if you get a surprise move, then great. So what I'm calculating is based on what JPM has done in the past. Okay. Can you see here this 3.91? 3.91 is the average over like the last 20 earnings histories. 4.3, 4.5, 4.42, 4.45, 4.477. So what I'm doing is I'm calculating a 5% move just to give myself a little bit of buffer. 5% expected move based on earnings history, and that puts us up to about a $14.42 move. So if I take current price at 288, okay, 288.59 plus the 1442 expected move that I calculate, that puts us up to around 303. If I get a trade that fills a 300 by 305 or 305 by 310, my trade is a 305 by 310. So I give myself like extra room for a big buffer and see if I can get filled for a higher credit. So if we get filled somehow at a 305 by 310 for a 350 credit, probability of profit on that trade in my world is pretty high because it's going to take a lot for this move to not only get there, but also stay there and keep going higher. So I think a surprise move gets faded, especially if it surprises to the upside, and this market all of a sudden, takes a good bake, hits all-time highs, and then I fade it. And the reason why is I'm going into some of the bigger picture technicals, which is I think we have a pullback coming sooner than later. I think after some of these earnings seasons hit, like by the end of this month or into August, I would not be surprised to see the market fade. We didn't really have much of a dip or drop going into the OPEX cycle from June. It was June 16th and June 30th. The market just kind of melted up. We had a bit of a decline I had like a 59.05 level that we hit 59.40, and then we ripped up on that ceasefire agreement. So it like came down to 59.40 and then just propelled up through 61.050, which was all-time highs S&P, dragged the market with its all-time highs. So I have overbought conditions with divergence. What I would love to see is some type of pop-up here with overbought conditions again, and then fade that move after a week and see if I'm right. I pull in $3. The most I can lose is $2. And if I'm filled, $3 can become 2 very quickly. $3 can become 1 very quickly. And I can get the implied volatility crush, which means IV is running higher, higher, higher. And then after earnings, all the IV comes out. And so I can try to collect as much premium out of that as possible based on an expected move, right? So that's a very long answer for this is what I'm doing in my newsbreakers. is I'm looking at something like these particular trades is if I'm going to get filled, I'm not taking on more risk than reward, period. Okay. So we just have closing bell. New trades posted, UAL, Netflix, MMM, and JPM, all pending orders. They may not fill. We might not have a move that does anything surprising. But I'm like waiting for a lot of stuff to happen here. I would like to see either earnings, you know, go sideways. It's like the bar just kept getting lower, lower, lower. So I think the earnings can still beat, and the market might be a little bit optimistic, kind of stay at current levels. But I think it's very difficult to far exceed or surpass what the market's expecting. We're already at like a 22, 23 times earnings. Mag 7's at like a 29 to 30 plus times earnings. It's very difficult to stay and sustain like high valuations like this. Doesn't mean I'm a bear. It just means like even having okay earnings is enough to see the market kind of stay where it is. Not really disrupt, not really come down, just stay where it is. Well, cool. But the market's also throwing money at everything. And we've got Bitcoin at highs, we've got money supply at highs, we got AI stocks running like crazy, meme stocks are running like crazy. You got some names that haven't had really any love for a while that are running like crazy. So it's like, yeah, there's money getting tossed into stuff. Leverage instruments, a lot of money is getting thrown into stuff. I get it. But I am curious if I can just do the numbers, calculate what I think is a safe expected move, get a higher credit for that move. And if we're surprised, I mean, here's the nice thing on the trades that I just took, if any of them get filled, right? Here's the nice thing. If I win on these trades, my max profit opportunity would be, okay, and again, max profit, but $6 plus 55 plus 3 plus 3. So my max profit potential is 1255. Okay. So that's the most I can make in those trades. I'd make if one contract, I'll do 1255. So $1,255. Now compare that to 2, 2, 45, and 4. So I can make 1255 to make to risk 845. Slightly in my favor. So if all things considered, I net out, $845 of profit, even though I don't take the full 1255 of max credit here, I still make as much as that I'd be risking, right? So I'm really just playing the numbers, going out to what I think is calculated a fair degree of earnings and give me a reasonable expectation. And this to me is what I would trust more so than just putting in a market maker move, because earnings is literally a coin flip. And sometimes it's high earnings, sometimes it's lower earnings. And market makers can be a little deceiving with what they price in. Sometimes they're caught off guard and surprised. So I'm going to base my move off of what the market has done and then plan my strikes accordingly. So markets have done this, like JPM has done this, Netflix has done this. So here's Netflix on earnings history. And earnings, average about 9.15, but look at these recents. 13, 12.88, 11.89, 10.1 or 10.21, 10.36. So I calculate about 11 to 12% on Netflix. Okay, well that is for a $1,200 stock. That's a lot of price. That's like a $120 to $130 move. So I'm going to try to go up to that $130 move and fade it. So we'd have to have a great move on Netflix at all-time highs and stay there. It totally can. But if I get filled on Netflix, I'm getting filled for $6 to make 4. Or I'm sorry, to get filled for $6 to make 6 to risk 4. So if I can take 6 down to 2, I wash away a 1-to-1. Like I win 1 to 1. So I win $400 to risk $400. That makes sense? Okay. So like newsbreakers, just to let you know, like that service is a lot of my math, a lot of my calculations to give you good trades. I subscribe to this service here for a couple $100 a year. I'm always looking at earnings for a lot of the trades, earnings or mergers or big news events. And, I'm trying to calculate something pretty safe, give us a chance to make more money than reward than risk, and just play the odds. It's like we play the odds, we play the probabilities. And so far, we've got about 20 grand in the model portfolio, winning about 3/4 of our trades, over 3/4 of our trades. Like it works, So, and the nice thing here is like with these setups is like I'm taking losses that would be less than my reward. So I'm going to try to angle it that way. That's going to be kind of my approach for at least right now. Next week when we have Mag 7 and some of the other high flyers, I'll probably price out some more and see what they look like. Okay. All right. So that's that. Um, anyway, so where we are for the day, Newsbreakers got some love there for a couple of trades. SPX intraday pretty quiet for Monday, pretty standard for daily profit play. We just kind of stuck around this high volatility level at 62.60 all day. Again, push lower, slowly melted up all day. We're still really stuck between. I mean, this is a really easy thing to think about. We're stuck below 63 and we're stuck above 62 right now. So if you want to just write those key levels down through SPX, 6,300 on the upside, 6,200 on the downside. Markets this week without, and again, some earnings flow might help drive the S&P somewhere, but if we can't clear 63, I think we fade that. If we can't clear 62, I think we buy that, right? But do so with like decent premium. And obviously, if you get like an intraday flow that's going to look directional, like maybe my gamma levels light up to give me some trades. But we're really tight right here in this about 100-point range that I think can carve out a little bit of a top. I don't see the markets going gangbusters higher. Maybe more melt up, but I think we're going to be kind of choppy around this like 6,300 to 6,350 zone. And so if that becomes a nice level to fade, I would kind of like to fade that at least in the near term. So, and that's actually, waterfall income. We did that. We got a couple trades that have a fade move at like 6,500. I think like 64.50 to 65.50 area. So as long as price doesn't want to rip aggressively up to like 6,500, any type of pullback that we get in the next like 30 to 60 days, that should pay our fade moves that we have. Okay. Let's see here. Checked out. Yep. So yeah, and I'll have a link to all this stuff, but here I'll just put it on. I'll put it on the screen here. So actually, my Discord kind of explains all this. I'll go through this. So in my Discord, go to my channel here, Chris Pulver Trading, and under Education Updates, these are all my services. So daily profit play is literally daily income on the S&P or the Nasdaq. We trade indexes every single day. Waterfall income is swing trading on the indexes. We can trade the S&P, the Nasdaq, the Russell, the Dow. I can trade whatever I want, but I like that for waterfall income. Double up alerts. I'm looking for high reward to risk setups. I'm really picky about double ups because it's typically a 0 to 1 day expiration, and I've got to be really confident under it. If I'm not really confident, I don't take a lot of trades in this one, but you'll probably still get, 40, 50 trades a year. Newsbreaker, earnings season is always a big deal in the stock market. So earnings seasons, triple and quadruple witchings where you have futures options, equities options, index options, volatility expirations, those all together. And you throw in earnings on top of that, we have a lot of expirations that are key catalysts in the market. So newsbreakers, I'm looking for, something to drive price. Options Edge, that's a discretionary service that I run. I take a bunch of different strategies. That's probably, you want to have some prerequisite knowledge with some of my other services to get the gist of some of these strategies I use. It would incorporate some simple, debit spreads, credit spreads. It would incorporate some butterflies, maybe some ratio spreads. I'm willing to own some shares with the Edge because I'm going to use, kind of portfolio power that I have. Pinch Point. This is a scanner that I built. Finds me and spoon feeds me great trades. We are 9 for 10 right now so far. The service has been in for maybe 3-4 weeks. We have a 90% win rate with live trades. So I just have to check a scanner that's built, and you get access to the scanner my alerts if you want to add that in. Crash Insurance Masterclass. This is how I properly and tactically hedge my portfolio. I hate doing it, but it's a necessary if I want to protect the downside. I've got to protect my profit typically I should say protect the downside every like 6 to 12 months. So usually it's, buying puts. How do I find my numbers? What am I willing to pay? I have a certain amount that I'm willing to kind of sacrifice for, if the market melts up higher, I sacrifice that little bit of insurance. But it is worth it for events like we had this year in February, March. I made, I don't know, $30,000 or $40,000 in hedges to help offset some of the drawdowns. Last year we had the big dip in July and August. I made a lot of money there through that window as well. So, every couple of times a year when the market kind of ventilates and gives you a 5, 10, 15% correction or worse, you can get some really big payout. So for the rest of the year, I have payouts on my Crash Insurance Masterclass that is paying up to like 16 to 1 reward to risk, 25 to 1 reward to risk, even up to 40 to 1 reward to risk. And again, cost me like a fraction of a percent. VIP All Access, that is, you get all the stuff. That's the big ticket item. I've got some easy on demand stuff here. Survival Trader Toolkit, market mapping, price patterns in the market, trading a lot of anything. It's basically currencies. This was done maybe 7-8 years ago, but it's like a legacy video service that's on demand. Lots of patterns, lots of symmetry, lots of way I see the markets, technical analysis, practical options. $27 quick course, and then you can upgrade for the full course. If you are a lifetime member in any of my classes here, if you're a lifetime member, you get the full course for free. So that's a $497 bonus if you get a lifetime upgrade to any of these services. Okay. All right. Good stuff. Yeah. So it's all right there. And if you have any questions, let me know. You can hit me up in Discord. You can come to these live sessions and ask me. I should be having in the next week or so, I'll have direct links to all these classes. So I'll post them in this summary. So service summary for everything. And I'll have direct links to go into it. Cool. Okay. Sounds good. All right. I will let you go for today. We'll come back and do it again tomorrow. Trying to think. Everything's good this week, schedule wise, except I'll be out of town on Friday, so no final hour session with me Friday afternoon before the close. We're heading out to Michigan. So we'll be flying to Detroit on Friday, probably taking like a 1 o'clock flight out of Salt Lake City. But I'll be in the morning. It should be like morning sessions are fine. Just kind of spot check the markets with a big weekly and monthly expiration, make sure nothing crazy happens, and then head out shortly after. But Monday, Tuesday, Wednesday, Thursday, business as usual, and I'll see you in the classes. All right. Thanks, everybody. See you soon. Bye.